What's up, ladies and gentlemen? Welcome back to the channel. Today's quarantined. It's day 13. It's Saturday, so we're skipping the intro. We're getting right to work, and we're going to have a morning meeting about financing a vehicle. We're going to use our trusty whiteboard here that we installed a couple of days ago, and we're going to talk about the 3 different ways you can currently buy a 2020 Chevrolet Equinox. The most popular version of the Equinox that we sell is an Equinox LT in all-wheel drive with a confidence and convenience package. And the MSRP of that vehicle is $32,340. Now, everybody watching this knows that you really don't pay MSRP for a vehicle, right? Everything's negotiable. So for argument's sake, we're going to use GM supplier pricing, which is $31,117.35 on this particular Equinox LT all-wheel drive. The reason I'm using GM supplier pricing is because so many people qualify for it. You can qualify through it through your company, if you're active military, if you're a teacher educator, police, fire, EMS. They just added healthcare workers to the program. So there's a number of ways that you can get an authorization number which would get you that sale price. To that sale price, we're going to add our first fee, which is our dealer documentation fee. It's $299. Now I know what you're thinking. It's a ripoff. A dealership shouldn't charge it. But if you think about it, you literally pay fees for everything in life. It doesn't matter what end of the spectrum, there's fees involved. So why should a dealership be any different? On a personal side note, I think that if a dealership had a very strong social media presence, didn't charge a documentation fee, and just flooded their advertising with the fact that they don't charge fees, I think over the long run, they would do a lot more business and it'd be a lot more lucrative than the $299 they're making on each deal. But that's just my personal opinion. Next, we're going to add New Jersey sale tax, which is 6.625%. On this dollar figure would equal $2,081.33. Next, we're going to add New Jersey's tire fee, which is $1.50 for each tire on the vehicle. That equals $7.50. And lastly, we're going to add a $301 charge for 4 years worth of motor vehicle license plates for the state of New Jersey based on this weight class. When we total all that up, it equals $33,806.18. That's our out the door number. And we're going to use that as our total finance amount because for this exercise, we're not going to put any money down. Now that we've established a sale price, all the tax and fees, and we have an out the door number, we have to then apply that to whatever incentives you may qualify for. Currently, as of this upload, there's 3 different ways to finance a Chevrolet Equinox. You can take 0% for 84 months with no stackable rebates. You can take a $1,000 rebate and also get 0% for 72 months with no other stackable rebates. Or you can finance at your own rate or at a standard rate, take a $4,500 rebate and possibly have another rebate that you can stack with that. So I want to break down each of the 3, show you where the payments are, and show you why 0% for 84 months might not be the best particular choice for your particular situation. Currently, the first option you have for financing is taking 0% for 84 months. And that's really easy to figure out. We're going to take our $33,806.18, divide it by 84 months, and we're going to come up with a payment of $402.45. The second way is to take an extra $1,000 off the vehicle with a rebate and still keep 0%, but only for 72 months. Pretty easy. We're going to take our $33,806.18. We're going to subtract the $1,000 rebate, which brings our out the door to $32,806.18, divided by 72 months, and we're going to come up with a payment of $455.64, about $53 more than the 84-month loan. Now, what you might be thinking is, why would I take a higher payment if I can be at $402 a month? And that's really up to your personal decision and your personal budget. Quite frankly, if you're able to handle the higher payment of $455, you're going to, 1, pay the car off a year faster, and you're also going to pay $1,000 less for the vehicle. But if money's tight and you want to have the lowest possible monthly obligation that you can have, well, then take the $402 per month, stretch it out for the 7 years, and again, you paid $1,000 more for the car, but you made it easier on yourself throughout the whole term. The last way to finance this car would be to take a standard rate through whatever bank, maybe one of our banks or maybe one of your banks, but take a $4,500 rebate off the price of the vehicle. So we're going to take our $33,806.18, which was our sale price, our tax, and our fees. We're going to subtract a $4,500 rebate, which is going to bring us to an amount of $29,306.18. Now, let's say an example of 4% for 72 months, you'll be paying about $459 a month. If you got a 3% rate for 72 months, you're paying around $445. About a $14 difference between the percentage point from 4% to 3%. The last thing you want to do to compare this is you want to total up all the monthly payments. So right now, we already know that if you take 84 months times $402.45, you're going to be paying $33,806.18. We also know that if you take a $1,000 rebate off, you pay $455.64 times 72 months, you're going to be at $32,806.18. But what about the totals when you're paying an interest rate? In this situation, we had a $4,500 rebate. We paid $29,306.18 as a finance amount. We had a 4% rate, we were at $459, or if we had a 3% rate, we were at $445. So if we take those payments and multiply it by the term, 72 months, it's gonna give us our total of what we would have paid for the vehicle over the course of the whole loan. So for 72 months at $459, we're at $33,048. And if you look here at 0% for 84 months, we're at $33,806.18. So you're saving about $800. And these are important numbers to know because this is going to show you exactly what you would have paid for the car over the entire term of the loan. And as you can see, we already know if you took 84 months at 0%, you'd be paying $33,806.18. If you took the extra rebate into 0% for 72 months, you would have paid $32,806.18. But check it out. In this calculation, we have a $4,500 rebate. If you add interest at 4%, you're at $33,048. So you're about $800 better than the 0% for 84 months. If you had like a 3% rate, you're at $32,040, which is about $800 better than the 72 months at 0%. So they're all pretty even and all pretty close. The main reason I wanted to do this demonstration and to kind of get this point across is that when you have a salesperson or a finance manager teaching you or trying to educate you on the different programs, don't just think that 0% is the best. Because in 15 years of doing this, I see that. I see customers that say, I want the 0%, and they won't even entertain anything else. But depending on the rebates a particular vehicle might have, it might be better to go a different way. Now, it all comes down to monthly payment for the majority of us. And I tell you, $40 or $50 a month could make a big difference. So like in an example like this, if that $40 or $50 a month means a lot to you, then by all means, take the 0% for 84. But just give the salesperson or give the finance manager the chance to kind of explain it. Another thing to take into consideration with a calculation like this is we don't have any money down and we don't have any trade. Now, the more money you put into a situation or an example like this, the better the rate and the rebate is going to look. And the worse the 0% is going to look because you're financing less money. And with interest rates being so low, when you have something like a $4,500 rebate, that helps wash out whatever finance charge you would have actually paid on the loan. The last tip I want to share with you guys is a Google Auto Loan Calculator. You go on Google, you put in Auto Loan Calculator, it's going to bring up this screen. You can put the amount in, you can change your interest rate, you can change your term, and it's going to give you a payment automatically. So if I take out 3%, I put in 5%, change this to 72 months, it's going to give us a payment of $403. This is a good way while you're at a dealership that you can just 1, 2, 3 figure out different payment examples based on what your salesperson's telling you, the rate will be and that sort of thing. Also for salespeople, it's a great tool to use. I use it all the time right at my desk. I just use example rates. I usually use 3 or 4 different rates because I want to make sure I give a range, because until we run somebody's credit and that sort of stuff, my finance department would get into the exact numbers. But it's a good way to get a range and just kind of show somebody where the payments will approximately be. I hope you got some sort of value out of this video. If you did, thumbs up, always appreciated. If you have any questions at all, please just put them down in the comments. I'll answer them all. And again, this is an example based on the programs we have today, which is what, April 3rd or 4th. Rebates and things change constantly. So again, this is just an example based on what numbers I had as per this upload. Thanks for watching, and I'll see you tomorrow, CAR-ANTINED Day 14. By the way, if you saw this video and you didn't see my other videos, I have a Dealership Life playlist, which is about 70-something videos of what it's like to work at a car dealership. I have a lot of product videos out there about Chevrolet product, and because I'm currently under lockdown in the state of New Jersey, I've been making daily videos in my basement/studio about car business and just me doing daily activities to keep my mind sane. And I'd appreciate you checking all that out as well. Have a great day. I'm back. I can't believe I forgot this. With the $4,500 incentive, there's also other rebates that you might qualify for based on different situations. So for instance, right now, as of today, we have a lease conquest and a lease loyalty rebate if you have a leased vehicle in the household. So let's say you lease a Chevy Traverse and you're gonna buy an Equinox, or you lease a Honda Accord or a BMW, and that's in the family, you actually save another $1,500. So you would subtract $1,500 additional dollars in rebate, which would equal, $1,500, which is about $23 per month on a 72 month. So you would drop these payments down even lower, which is another reason why, you have to listen to your salesperson when they're trying to, go over these rebate programs with you. Because in this situation, now you're better across the board. It just makes more sense because these payments are going to be only about $20 a month more than what the 0% is for 84 months. In that basic calculation, which is stuff that a lot of people qualify for. A lot of people lease vehicles and have them in the household. So it's a rebate that we use. We use it a lot. So again, any questions, let's put them in the comments below. Sorry, I forgot about that.